Okay, ladies and gentlemen, we're almost at lunchtime, but before our lunch break, we have a special presentation by Sam Hodges of Funding Circle. And Sam was on the small business panel before this one, and he has been a part of the Funding Circle team. He was actually part of the founding group of Endurance Lending Network that was merged with Funding Circle late last year. And he is a driving force in the online business lending industry. And I hope he's ready. Are you ready? Yes, he is. Okay. So without any further ado, Sam Hodges from Funding Circle.
Perfect. Well, first off, thank you very much to Peter and Dara and the rest of the organizers for having us here. As Peter so kindly introduced, I'm Sam Hodges. I'm a co-founder and the head of Funding Circle in the US. Funding Circle is a marketplace for small business credit, and I'm really excited to talk with you a little bit more about how we are transforming the way small businesses all over the world get access to loans. As with all good presentations, we have a disclaimer. I'll let you read that because you can probably read a little bit faster than I can talk. And actually, to get into this, I want to talk a little bit about my own personal experience as a small business owner, because it's really foundational to why we started what was then Endurance Lending Network, now Funding Circle USA. And that's simply that, after spending a number of years in Wall Street, raising tens of millions of dollars for equity and in debt for a variety of different businesses, my co-founder and I actually got into the business of building up and running a set of gym franchises. We have 5 small box gyms all over the country. They're still in existence. They're actually quite profitable, great assets. And the crazy thing was, when we went out and talked to lenders, we talked to 90 different lenders, and we couldn't get a loan. Not only could we not get a loan, we couldn't even get one of those lenders to produce an accurate amortization schedule or a clear calculation of what our interest rates would be, which on the surface of it was just completely shocking to us. And so what we did was set out to build a much better way for small businesses, particularly really high quality small businesses, to get access to the capital they need to expand and grow. Now, where we are today, kind of by the numbers, is that Funding Circle is the world's largest P2P lender or marketplace for small business credit. We're also the first international one here in the US and also in the UK, and I anticipate by the end of the year in other geographies as well. We have 160 employees globally, and we're backed by a great group of venture capitalists, some of whom names you might know. Now, I talked a little bit about how painful it was for us as individuals to get access to capital, but what we realized as we dug into it more, and this is true in the US, it's true in a lot of other developed markets, is this is a systemic problem, excuse me. There is a $250 billion shortfall every year for small businesses in the US looking for loans under $1 million. And this problem has been particularly acute post the financial crisis, but it's actually a much longer term trend. Due to regulation and due to high costs, most banks have pulled out of making small-term loans to small businesses. They focus on larger loans, they focus on real estate loans, and they focus on credit card. And so what that means is there's a whole category of very creditworthy borrowers who don't have access to capital really at any price. Or if they do have access to capital, it's extremely expensive, such that they actually can't make money taking out that credit. The way we're solving it is through a marketplace. And for us, what that means is we're really providing 3 critical functions. The first is we're finding the borrower and doing the origination. The second, we're doing a really rigorous credit filtering. And we'll score all of the loans that get placed for sale within the marketplace. And then the third is we're creating the entire marketplace function such that an investor can come in, pick which type of loan they want access to. They can do it through a variety of different strategies, and then we're servicing those loans over the course of their lifetime such that investors can just get a monthly remittance of the capital, both principal and interest, that's returned through the loan repayment. Now, as small business owners, the experience of this really matters. And I think it matters on 2 levels. One of which is for me to feel good getting up in the day, I have to feel like I'm actually providing a valuable service in the world. More importantly, for the investors out there, by creating a great experience, you're getting access to the very best credits. And if you go and talk to one of our borrowers, what they'll pretty quickly tell you is they like working with Funding Circle for 2 core reasons. The first of which is we're very fast. Not overnight fast, but within a number of days they can get a credit decision, and within a week they can actually get access to the funds they need to grow and expand. And if you're a small business owner that's looking for, say, $100,000 to buy a piece of equipment to expand your light manufacturing business, that's really important. It's really valuable. And most lenders who are doing term lending would take months to turn that around. The second reason small businesses tend to like us, and why we oftentimes will win business even when we're going head-to-head with a bank, is transparency. We are extremely transparent with our borrowers throughout the entire process with respect to where they stand in terms of our credit approval process, what our fees will be, and also what the interest rates they'll pay will be. The way we measure this and how this kind of manifests from a data perspective is in our Net Promoter Score. For those of you who aren't familiar with that term, Net Promoter Score is basically a measurement of whether someone would refer one of their friends or a competitor to you based on the quality of your product and service. And almost 90% of our borrowers would say that they would refer a Funding Circle to another small business owner who is seeking capital. Now, that's in stark contrast to most financial institutions out there. Most other lenders are really down there with airlines. You want to stay away from it at all costs. And because we're so successful in creating a great borrower experience, we've been able to scale this platform up even while staying very prudent from a credit perspective. This year, we're on track to do $600 million in origination across the US and the UK, with $100 million here. Now, I talked a little bit about credit before, but getting credit right is one of the most, if not the most important thing we do. Every single borrower we see goes through a very rigorous 3-step credit process that makes sure that we only place the very best loans for sale within the market. The first step is an eligibility check, which is completely automated. It's based on a short set of questions and a few pieces of third-party data that we know are extremely predictive of whether someone's going to be a good borrower and a good fit for a Funding Circle loan. For those borrowers who get through that step, they then go into a second stage, which is a detailed assessment of the business. It'll take a well-prepared borrower about 15 minutes to go through that and to fill in the information and to link accounts and give us the permissions we need to do full underwriting. And then our credit model can run and we can come up with a preliminary score for that small business. Then for the small businesses who get through that step, every single loan that we place in the marketplace goes through a commercial underwriter. We have a whole team of really experienced commercial underwriters who go through a detailed fraud check, make sure from a customer service perspective the borrower is well served, and finalize all of the details of the loan. We also turn down many loans at that case because of the work that underwriter is able to do. And the result of that 3-step process is only the very best loans are then put into the marketplace and eventually funded by our network of investors. The returns in this asset class have been very strong so far. In the UK, which has been around for about 4 years, you're talking about a mid to high single-digit return, net of fees and net of losses. In the US, we're still a little bit younger, and because of that and because of the structure of the market, we're pricing up a bit higher. We anticipate net returns to come in the low teens. This is something that, out talking with a lot of my investor friends, is pretty exciting because it's an asset that doesn't necessarily correlate with other things that people hold. It's a cash return. It's something where you can actually take a monthly coupon. For investors who are interested in this, we offer 3 different ways of putting capital to work on the marketplace. The first is an institutional whole loan marketplace. It's one where an investor can come in and pick and choose 100% of any loan that they'd want. This market, I'm proud to announce, is now open in the US as well as in the UK. The second way that we're forming capital is through a set of funds. Those private funds are tiered based on a particular type of loan that someone would want. These are already available in the US and they'll soon be available in the UK as well. For someone who wants diversification and wants the ability to passively put capital to work, we think this is a really good strategy. The third and final way that we're forming capital is through what we call the fractional marketplace, where we're taking a loan, splitting it into lots of pieces, and then putting it available for sale within the market. In the UK, this has been our bread and butter for the last 4 years. In the US, we'll be launching this later this summer. So again, something we're really excited about, and we'll look forward to sharing with you in just a couple of months. Now, before I finish, I want to let you in on a little Funding Circle tradition, which is that every week we send out an email to the entire team with major company announcements. And in this case, I want to share 3 circulars with you, all of which are really big pieces of news, and none of which we've actually formally announced before. The first of which is, effective actually later this quarter, we'll be rolling out a C risk tier. This will be the 4th risk tier that we have available in the United States, and it will allow us to serve approximately 25 to 30% more borrowers than we currently do. It'll also allow investors access to our highest yielding product from a gross perspective, and probably also the highest net returning product available within the market. The second announcement is that as of this month, as a whole platform, we're crossing through $500 million in total historical origination. And as I said, we're actually also on track to do $600 million in originations this year. And then third and finally, we've launched whole loans in the UK. When Endurance and Funding Circle came together, one of the major parts of our thesis was that actually serving as a single point of entry for institutional investors who wanted access to this small business credit opportunity across geographies would be an important way that we could win. And as of today, we're already seeing that happen, with several institutional lenders now playing across both geographies. So to sum it all up, the main 2 things that I'd like you to take away from this are, first off, we really know small business. We come at it from the perspective of small business owners ourselves, and as people who've worked, in credit markets and in equity capital markets. And the second piece of this is we're working on this problem internationally. We're the first platform to allow access across multiple different geographies, and I think toward the end of this year we'll probably even be beyond the 2 that we're in today. So I guess with that, I've got a couple of minutes for questions, and I really appreciate all of your time. Do we have microphones?
Stuart Stone from Moneyplace Australia. How do you distinguish which loans go to which of those 3 options?
Yep, great question. It's programmatic. And so we actually have an allocation algorithm which we'll share with any institutional investor who wants to understand. Obviously, there would be concerns if it were, if we were getting paid to put the better loans within one part of the marketplace versus the other, that'd be a big problem. It's not what we do. Instead, what we do is just split them based on basically capital demand. Well, again, thank you very much for having me. And with that, would welcome all of you to join us for lunch. It'll be served in the exhibition hall, and happy to answer any questions one-on-one as well.